All right, so a little bit of constructive market talk ahead. What I'll be addressing is that of the Nasdaq. We'll then also pay attention to the transportational average and the Russell 2000. We'll also take a look at some of our individual trades which we are following on the left-hand side of my screen. I'm not sure how long this recording will go for. However, this will be in many ways a little pre-market update as we head into Wednesday's trading session. So the Nasdaq, obviously on Tuesday, it took a little bit of a belting down, or closing down more or less right on 100 points. What is interesting about this chart right now is a number of points really. What we are doing, first of all, is trying to unlock this sentiment as to what is happening up and around this very important resistance area. You can see on my screen, since the beginning of June, we've been trying to overcome 6,300. Now, most recently, again, going back 2 weeks ago, the difference between Friday's closing session and where we kickstarted the week 2 weeks ago on Monday, you can see this open gap on my screen. I might need to zoom on in into this just so you can see the actual gap here. But you can see the week just passed, we rallied back up. We came very close to resistance. We have now more or less established what we assume to be a lower high. Again, this was first sort of addressed or at least painted or illustrated on Monday, where we began to see this bearish piercing pattern. You can see right here, this is a 2-day reversal. Candlestick pattern showing up at resistance. Tuesday, you can see more or less the bottom short-term falling out of the market. What's interesting about this is that we have just more or less closed the gap going back 2 weeks ago. So the difference between Friday's close on the 16th and then when Monday opened on the 19th, we have just overshot this on Tuesday. However, what you should be expecting with the Nasdaq is for this type of support area to more or less hold. Now, I'm not saying that we can't push on down a little bit lower. Of course we can. But in this rough or this general vicinity here, around 6,150 down to about 6,100, this is coming in line with the rising 50-day exponential moving average and also two of these short-term little swing lows over here. We would assume the price action for the Nasdaq to actually stop here momentarily. It may stop here for one trading session. It could stop here for a number of trading sessions. That's anyone's guess right now. But what we're starting to do is understand just what the market is setting up for. And, the best way to actually show you this is to zoom out a little bit further, and we can all agree on a number of things. First of all, the market has been relatively strong. It has been trending, and that is fantastic for technical swing traders, for anyone really actively involved in the market. When you're in a trending state, generally a low volatile state where the market itself is just trending, that is really the ideal time to be taking advantage of individual swing trades. I mean, and again, these have been mostly bullishly sort of orientated. However, when we come up to resistance and sort of touch it on a number of occasions and see these types of pullbacks, you have to start asking the question, well, instead of trending, are we potentially setting up what we would assume to be, pardon me, a sideways moving channel? And it looks as though, I've been floating the idea of this for a number of weeks, if not more or less, a month, almost 4 weekends now. And it looks as though if we do break this little swing low over here, this short-term swing low, which we've established in early June, there's a very high probability that on my screen, you can see this green rectangular box. Now, this hasn't been moved since I drew it on here. But again, it wouldn't surprise me to see the Nasdaq pulling down a little bit further to overshoot the actual 50 rising exponential moving average and to come down more or less to 6,000. Now, at this particular point, if we get down to here, consider this a fantastic buying opportunity. A lot of our individual trades, especially tech-heavy companies, are also setting up similar types of transitional phases. Now, again, this isn't any macro sort of big picture trend shift at the moment, but we are addressing the simple fact that the bullish trend may be sort of exhausting itself short term, and we may be setting up a channel consolidation between resistance and also support. One of the major hints out there in the world of technical analysis is the ADX and the CCI. Generally, you want to see the ADX turning up when we are in a trend, and that is, that sort of gives legitimacy to the trend breakout and also the trend continuation. On top of that, you look for the CCI to be remaining or at least holding above that positive 100 level. Now, as you can see most recently, the difference between really Friday, where we closed last week, and as at the close on Tuesday, you can see the CCI has more or less fallen off a cliff. The ADX still hasn't turned up, so it doesn't like the trend, so to speak, of the bearish pullback. However, the CCI is telling us a lot at this particular time. It is suggesting, that we are moving into a channel consolidation. The same is true for the Dow Jones Industrial Average. Although we are breaking above, or we have broken above, we're still holding above, again, these three key rising exponential moving averages. But when I bring up that same template and apply the CCI and the ADX has definitively turned down. That coincided with this gap over here. And again, the CCI, although it hasn't printed below that positive 100 reading, you can see it definitively turning down as well, suggesting that the trend itself is losing a little bit of stamina or momentum. This is the S&P 500, a very similar picture as well. We've just cracked that positive 100 area. The ADX has just turned up, but we are still holding above macro support, and we are still trending bullish. So, I mean, the picture itself seems to be changing a little bit. I need to bring this to your attention, especially in the Nasdaq. Really, it's going to be very interesting to see whether or not we can hold at this gap, which is just more or less filled on Tuesday, and also to see what happens once we start interacting with this rising 50-day exponential moving average. In the past, if we go back and have a look at this when we touch it, generally we see a bounce and a continuation to the upside. However, with the CCI and the ADX turning down, it does suggest that we may be setting up sort of a prolonged sideways channeling type of market environment, which is a little bit different to that of the channeling, or sorry, not the channeling, but the trending market conditions that we have been in for quite some time. The Dow Jones Transportational Average, again on Tuesday, has established almost another parallel type of shooting star candlestick. You can see the construction very similar to that of what we saw on Monday. You can see how the real body of the candle on Tuesday, or at least the upper wick, isn't really twice the size of the body, but it still takes that general formation, which we would start to sort of address, or at least confirm as a shooting star, happening right up around resistance. So it looks as though there is a little bit of weakness flowing into the transportational average. However, we still haven't seen any legitimate breaks of 9,160, nor have we seen the market break out above 9,660. So we're looking for this particular market to confirm the current movements or the current price action which is taking place on the Dow Jones Industrial Average. If I take this one step further and really start showing you market breadth, this is encompassing really 2,000 companies within the Russell 2000. You can see the candlestick again. On Monday, we were left with a high wave spinning top. And then on Tuesday, we do have another bearish candlestick as at the close on Tuesday with elevated bearish volume as well. You can also see these oscillators, which are also suggesting that, look, we may not be set up for the breakout yet. It doesn't mean that it's not going to come. What this is suggesting is that we may be still stuck in this channel consolidation, and that we're a little bit early for the breakout. But until we start to see some major structural sort of breakdowns, we still have to be relatively constructive on this and relatively, optimistic looking forward. And that's exactly how I remain at this particular point. Amazon is another interesting stock. We spoke about this over the weekend, about this gap fill. Again, it acts like a magnet, price action to actually close the gap. We're coming down very close to our green box. There isn't really an immediate tradable opportunity. It is counter trend because Amazon obviously has been in quite a very strong bullish trend. But this is just another sort of stock that we've been paying attention to. We've been discussing, I guess, the sentiment, the narrative of the story, and looking for opportunities. Well, it looks as though this stock is doing as we thought, as we expected, as we forecasted, and it's coming back down to this level of interest. I mean, on top of that, you can see Baidu continuing. This is another profitable trade. We had shorts at 180. That was our original short. We got very close to our target. We didn't hit our target. We saw the short-term bounce back up to retest the pivot, and now we're starting to roll over. I'd be closing this trade out of a profit for everyone in pro once it hits 172. 32. I think we'll get there most likely before Friday, but this is another stock that you should be sort of paying attention to. We've got COP. This is exciting because we're coming back down into the green box. I'm going to be speaking about this over the weekend. Same as CVX. There's another very interesting stock. And Google. This is relatively interesting. I know I'm using the term or the word interesting quite a bit, but it looks as though we have a little bit of an island reversal candlestick, or chart pattern, showing up at the moment. So, I mean, there's no immediate short on Google, but there certainly is the opportunity of a secondary lower high here. And this particular chart pattern, as I've already alluded to, that of an island reversal looks to be sort of forming, which is something to speak about over the weekend again. Goldman Sachs is also moving exactly as we expected. I believe we're going to come back down into this green box, and we're going to be sort of offered a tremendous risk and reward sort of trade on Goldman Sachs. I think we're going to get that next week, so that's relatively exciting looking forward. Netflix, again, we're moving into over the weekend. I described it as a little bit of turbulence, so to speak, as to these types of trade setups. Netflix and also Apple. You can see I've got a dotted line here. Also, the first trigger on Apple. We've been talking about turbulence, where more or less we're going to get stuck moving sideways, but ultimately we should see the oscillation back up into resistance. Well, that is exactly what is happening on these two particular stocks. These are a work in progress, but again, we're hitting the nail on the head, so to speak, with the actual analysis applying to these individual trades. There is going to be a more finite trade opportunity in due course, and you can see also Tesla continuing off from the statements which I made yesterday in the video. You can see how, again, the sentence itself has finished. These have been two tremendously profitable trades, 187, 192, up to $200 on Boeing Airlines. You can see how we're pulling back. That is exactly what we've expected. Again, on Tesla, 334. 344, 346 were the breakout entries into those core contracts. We hit both of our targets, 370 and 385. But as you can see, they're pulling back. I do not have a bearish trade on Tesla, nor do I have a bearish trade on Boeing Airlines. This is counter trend. What's most important right now is what happens with the Nasdaq around this gap fill. Are we going to see a larger pullback back down to this macro support area? Or are we going to see the market stabilize around this rising 50-day exponential moving average and to try and retest this pivot point once again? Also, think about the transportational average and the Russell 2000 that I've already sort of articulated in previous videos. But that's something, again, that you should be mindful of really for the rest of the week's worth of trading. But I think it would be beneficial to bring it to your attention right now. So on that note, everybody, enjoy your Wednesday. Enjoy Wednesday's trading session. Wish you all profits wherever you are located around the world. I'll be back with you in due course. All the best, everyone. Goodbye.